All right, welcome back, guys. Wow, it took a little bit of a break, but we are back. Okay, so I've been hearing a lot of talk about us being in a recession. Now we're heading into one. We haven't been in one, or we have been in one, and now it's confirmed. Mentioned it several times, many times on this show, that we've been in a recession. I've argued that based on the Dow Jones Industrial, based on the market, based on productivity, we've been in one and not just a technical one. And we're now seeing the housing, which was arguably also in a bubble, starting to begin to show signs of a collapse. I'm going to pull up a couple of charts and contrast them to some other charts that I've been seeing. All right, before we do that, let's get into the charts. So Bitcoin on the 1 day. Also, to note on the 1 day, I like to do short term, but I know that I don't always get my videos out in time, so I've been relying on Twitter to get my short term calls out. But I'm not sure if a lot of people are following me on Twitter that are watching, if they're watching these videos. So no problem though. You know, I will conform, and I'll make sure that I do dailies so that you can get some interesting forecast reads from me on the daily shows. All right, so Bitcoin. One interesting thing to note is that back in April, we've seen this exact same volume metric back here across the end of April, mid-April to beginning, late March to beginning of April for a handful of weeks. Overall, if you look at this channel and trend pattern, not the same. I think a couple of volume spikes here have put us in the same mention as this metric here. If you notice that this down channel occurred inside this cross channel here, if I were to do the same here, this cross channel with the most frequency had occurred above the down channel. Now we're seeing this down channel occur just outside of the stronger downtrend channel. And if we're matching one-to-one point on percentile, this move will take us down to 15,100. Right now we're at 18,006. So I don't think that's likely. In fact, I think it's very highly unlikely. I'm not saying that we're not going to possibly look to 15,000 as a potential downside. But what I'm saying as far as the next week or two, and at least for the next 2 days, we have a breakout probability occurring right now at 53%. However, we see profitability breaking just about even. High frequency, low volume trades occurring under the third quartile more often. So at some point, you're going to want to expect that the low frequency, high volume trades are going to start evening out and start to move up towards the middle. So this will probably break closer to 50% low volume versus high volume. And this profitability will likely come down under 50%. Very little price movement as far as the next day or so. If we can break up above this channel, just under this channel at 19,900, then you're looking at quite possibly pushing up a little higher. I wouldn't say as high as 24,000, but we bounce around more likely in this 22,000 range here. If we cannot break 19,900 or close above 19,800 in the next 2 days, you are definitely looking for a 60% probability below 18,300, which is marked right here, 18,275. So you're likely to break down or match 18,275 for the lower end of that forecast. If you see here, our intervals are matching that earlier downward channel at a rate of 79%. So Solana, very similar situation. Looking at the 1 day here, getting a short-term read for breakout to the upside, but I think that's just because of this red candle that's broken out here with very low volume. At some point, you're going to want to start to see or expect that high volume, which is low frequency right now, going to start to move towards the middle. For the short term, next 2 days or so, because of the very low volume, could easily be affected. The whole market could easily be affected by some more significant trades. So if you're expecting some low frequency right now, high volume trades, very impulsive market, easily affected. So you want to play your volatility properly and based on that. Next couple days, you want to watch out for this channel here, bottom of this channel at $30. Massive recent pump for Luna Classic. Follow me on Twitter. I had mentioned it about 15 hours or 5 hours or more before the first person who mentioned that Luna Classic was going to pump. But and at the time I mentioned it, price was 0.0019-ish, maybe a little bit less. So that was about a 70% pump from there, from the top of the pump at 50%. We're looking at a downward channel here on the Classic. Crazy volatility on the Classic if you're trading it. So you're really going to want to read your quartiles on that one and really just get in and get out immediately. You see a very overweight high frequency on low volume trades right now. So at some point, you're likely going to see this even out here and volatility is going to increase for sure. And you're likely looking at some more downside unless Luna Classic can sustain with some news. Down market, hardly any trades. See profitability now under 40% for Luna Classic. Most trades occurring third quartile or less. Matic, one of the very few super strong moves to the upside. However, fallen out of its trend line, and now we're seeing some downside for it. Some pretty bullish news with Robinhood app recently in Polygon partnership. However, on the opposite end of the spectrum overall against the market, Polygon seeing some higher frequency on the higher volume trades. However, volatility is definitely maximum still right now. And so you're seeing our divergence indicators suggesting so that while we're getting a lot of bullish signals, volume is dying for Polygon as well. And you see a lot of the, you see here, a lot of the upper quartile, 90th percentile trades are occurring at higher frequencies, while second quartile is occurring probably pretty frequent. Fourth quartile is way stronger. So you're definitely going to want to look for this to even out, which could spell for the midterm some really strong upside for Matic. But right now, for the immediate term, you're looking for a little bit more downside. I would say back into the 60s, quite possibly for Matic for the next few days. If it can manage to resist at 70, then that's where you could see your pivot for Polygon and probably back up above this cross channel here for between 80 and 84 cents in the next couple of days for Matic. Injective, also very similarly, really strong pumps, but equal dumps. But as far as behavior, if you look at it, mapping out the way you would probably expect to see, pretty textbook Elliott on behavior here with the triples. And we are seeing a recurring pattern and a channel here for injective. So at some point, you're going to want to see a breakout actually occur for injective. Again, heavily weighted on the high frequency for low volume. So volatility at hand for injective coming soon, probably in the next couple of days for injective. Going to start to continue to build into this pressure here and probably likely going to see some downside. I don't think it'll go to 1.2, but you could be expecting something at what we were talking at or looking at earlier in the low 1.5s. Just a quick read here. So low 1.5s and quite possibly for the downside 1.4 again. You see our deviations against the second quartile and third quartile, at least some immediate term downside for injective. However, if it continues to zigzag in this channel up here and bounce off of 1.5, then you're looking at maybe one more 333 or 333 for injective to play out for the behavior, and then you're going to want to look for a new trend. Veracity also really strong move. Highlighted this similarly matching volume metric here back in July. However, you can see here again patterns are very different, and overall really strong trend for the downside. As where injective was having some really good price movements, I think that some consolidation is in store, some zigzag for Veracity. and your upper level here at 0.05. That'd be really extreme upper level. And the lower level channel line being 3.6 for Veracity. So bouncing between these, if you want to look for more consolidation here, then you can see that synchronicity is pretty matched on low versus high volume. Really, really weighing strong on the third quartile here, hidden bullish divergence here for Veracity. So for the next couple of days, I would start to look for some turn up. You're likely looking at, unless we get a massive pump on Veracity, in the mid fours, so about 0.045 for the next day or two, or within the next day or two for Veracity. However, that's probably unlikely if market continues to be really low frequency, as it's been for the past day or two. Okay, Shiba. Good things to look forward to with Shiba, Shibaverse, and things like that. Overall, really, really weak market as far as frequency goes. See frequency pretty much breaking even, low and high volume on Shiba. Most of the buys occurring in the third quartile. So as far as profitability, really weak as well for the low volume on Shiba. So just like Veracity, most likely that actually could be good news, is that people are holding Veracity and Shiba, not trading it so much. If you're looking for a price range on Shiba, I think that the 11s are still going to be traded on the high side, 11.6, and on the low side of that channel, 10.50 about-ish, based on the metrics. And where I marked these was based on thirds and the volume metrics. If you are, if Shiba can't break 136 or 133 in the next day or so, then you're looking for some downside for sure. If Shiba ever gets into the 0.0009, if we add a 0 on Shiba, then you can definitely expect a nice pump up from there. However, I'm not sure if that'll happen at all. All right, so let's get into what's been going on with the recession talk. Dow Jones Industrial and Ethereum, Bitcoin. A lot of people cross-comparing NASDAQ and this SPY against Bitcoin. A lot of talk about we're heading into a recession or a long-term bear from here. So I thought I would look at a few things, and maybe that might shed some light, or at least provide a little bit of extra info as to where we are with the overall market. So Dow Jones Industrial, I'm using this chart. I mapped out a lot of the major recessions that are notable so that you can cross-compare them here against the DXY. I went as far back as the Great Depression. However, we'll start from the 60s. So if you see here, 60s on the DXY, and DXY following red and then dumping, while DJI continues to slightly grow here, and then some heavy sideways action for DXY, while downside for Dow Jones. And more or less, you can kind of see correlations or inverse correlations against both when you look at both of them. So while one goes up, the other goes down. What's interesting to note is what happens after we get out of recessions. So you see the DXY growing here and Dow Jones Industrial growing at the same time. This was a major rate hike here back in the 80s. So 1990, 91 recession, DXY was already falling, and it fell even harder during this time. DJI also fell, but really prominent move up here. And going into 2000 and 2002 recession, we saw somewhat of a sideways channeling here for both DJI and DXY. But coming out of this, DXY fell while Dow Jones grew. On the other hand, right into this 2008-2009 housing crisis recession, absolute dump for DJI. DXY rocketed. All that green there. Rising back up from its lowest point at $70. DXY. Then zigzagging while Dow Jones returned in a massive, massive growth here throughout 2010 to 2000, leading up to now 2020. We had the COVID recession, which had a really immediate short-term effect on Dow Jones, but more or less returned right away from that spike, that wick down, and really massive incline here. And DXY had followed suit more or less with a downturn versus the DJI rise. And then now we get to our point here, early 2022, late 2021, peaked for DJI, and now we're seeing the downturn while DXY continues to climb. A couple of things to note. Here I marked plus or minus 2% around the most frequent dollar range average for DXY. So the most frequent dollar range average is definitely $90 on the DXY, and plus or minus 2% makes it even more dominant on the frequency here. However, the second most was $100, and then the rest very few. You can see here that it's more often that we broke $80 as opposed to 110, which is their next levels there. So 80, 90, 100, 110, and then 120. Obviously, every recession is different and it had different effects, although you can kind of see somewhat of an inverse correlation or correlation for the up and down against each other on the DXY and DJI. When one goes down, the other one kind of goes up. If they follow suit, then they usually have an opposite effect after the recession. However, one really notable thing though here is that the DJI continues to climb overall, as where the dollar index, US dollar index, DXY, more or less fluctuates inside this $70 to $120-ish range, with one exception here, few exceptions here, at least from 60s and on. If you're looking at the frequency here, it had channeled 60% of the time, $90 to $100 range. The second most would be this $80 to $90 range. However, the most volatile point would be the $100. So from $100, you see the most extreme up or down movement from there. So down from $100 is most extreme, and up from $100 is most extreme. Most frequent dollar amount being $100 with the least amount of time spent above it. So there's more time spent below $100 than above $100. Right now we're above $100. We've been so since early 2022. Early 2022, DJI was already on the downside in early 2022 when DXY broke the $100 mark. So you can see also here that DXY hadn't broken $100 that often in history. I mean, not uncommon, but not super frequent. $110 was far less frequent and very, very notable for a couple of things. So whenever $110 broke, other than this tiny spike here, and arguably I could raise the 110 point a little bit above it, and I'd still get the same outcome as I'm talking about now. But for going this one, $110 both times in recent history had spiked above and come back down, and to return again on the same trend line. However, you see also both times previously breaking $110, it spiked up above it, came back down beneath 110, and then spiked up back above it, but had a red candle below it once, dipped under 110 once before trending up again. See the same thing here. So spike, fall back under 110, spike up again, but a dip once more under 110, and then returning again to touch or exceed 120. That's also really notable. So both times in history, it had spiked up, come back down, returned above 110, and then for a short dip under 110, and then reaching or exceeding 120 again, both times. Right now, we are above 110. So we've spiked above 110 currently sitting at 111. This spiked up. This is a lower spike. Are we looking at a lower spike here and a quicker return to the market? So what sort of level are we looking for with Dow Jones Industrial? I'd rather look at the time frame. So looking at the time frame again, spent above 110, 5 years above 110, 81 to 86. And this was about 2 years, from mid-2000 to mid-2002. So the frequency spent above 110 had also shrunk. Can we expect the same as well for under 110 or above 110 right now? So this one being 5, then 2, I don't know, 1. If you want to try and forecast what's going to happen, my way of looking at it. However, I do think that, leading up into these spikes above 110, you do see some channels here, right? Some channeling in this plus 2%, minus 2% around $100 prior to these rises in DXY above 110. We are following more or less similar cycle, but you do notice though that these channels prior to these rises above 110 are more or less followed by falls, stronger falls before rises, right? Stronger fall before rise. And then we have a stronger fall, but channeled here before we rose. So each time these falls were more extreme. If you're reading this like any other chart, it looks like the DXY wants to take a pivot here or reverse on a trend. Not sure what that's telling us. Overall, this is continuing to fall. All right, let's take a quick look at the Bitcoin chart and DXY. From most of what I can include on the Bitcoin chart starting in 2017, it starts on a downtrend for DXY and moving up. For half of this downtrend here through 2018 to 2019, DXY starts to move up halfway, and then we have a correlated move up for both and more down. And starting in 2020, early 2020, from the COVID event, the most notable recession that we have to include on these two charts right now, you see this major move up for Bitcoin from the COVID recession. And a second peak here while DXY continues to climb. Now we have a pivot on the DJI around 2022 in the beginning. We've seen here, end of 2021, January 2022, Bitcoin starts to end up on the corrective side of the Elliott for what we're in now, while DXY continues to soar and broke that 110 mark. At some point, the Elliott corrective would have to show results here and resolve. It's arguable that we've hit the third point here on the 1, 2. So now we're seeing 3 finish off. Is it possible that the 17,700 was the end of C? And now we're going to see a turn of events here now that we broke 110, and we're going to see some kind of resolve with a lowering top overall on the DXY. We'll find out soon. However, it looks like it could possibly mean some sideways action a little bit for Bitcoin, but very interesting to note. All right. So let's take a quick look at the fear and greed and see where we were this time in history before the last halving event. So on the behavior side, is it likely that we play out this scenario again? Or scenario 2, we linger out into 2023, we have more macro taking us down and we tread sideways for quite a while, possibly taking us to some lower prices, and then we begin to slowly creep up, bleeding past the halving of 2024, and then we finally realize a bull run in late 25. I honestly think that scenario 1 is more likely, and if scenario 1 happens, we need a more decisive move here, and if we get extremely low prices, we're going to have extremely higher highs than what scenario 2 has to offer. However, with higher highs, we're going to have immediately lower lows and quite possibly a blow off top. But take profit centers will be more frequent on the scenario too. All right, that's it. Thank you. Have fun. Trade safe.